Very good evening, everyone. Charles again. Sunday, the 12th of April, 2026, just approaching 6:15 local time here in Milan. Again, just a quick breakdown, to be honest, before I wipe these charts completely clean and start again for London Open tomorrow morning. So, a position taken on Friday afternoon, around about 3 o'clock. What's that? UTC +1. GBP US dollar shorts. Apologies, it's still suffering from allergies, so you'll have to bear with my blocked and stuffy nose. But nevertheless, let's get something useful out for the trading community. So, a short position. What you'll see first and foremost, there is no higher time frame GAN box in the region of which I wanted to short from. So, potentially that could have been hiccup number one. However, to mitigate the fact that I didn't have any higher time frame order block within that area, right up at the highs. I mean, there is certainly a tremendously large one that, to be fair, in my journal, I had journaled this as a confidence for taking that position. But nevertheless, even if that wasn't there, there is still a high degree of confluence from that area for reasons to be looking for the short. Now, first and foremost, we'll take that from the weekly time frame. Something that those of you that know how I trade or recognize how I trade, I like to use wick imbalances, specifically from those higher time frames, namely the weekly and the daily time frame. That's because I will use that wick imbalance as a confluence to await potentially price to get to that area. And then when price gets to that area, I'm expecting a reaction, a rejection from that area in line with the previous wick imbalances. So as you can see, the wicks to the left, they were filled almost to perfection. We've got this weekly candle here. Price didn't, in fact, yes, it did fill it. So it is doing its job, the wick imbalance, even on the candles before the ones that I'm referring to at the moment. But as you can see, this wick was what I was looking to be filled, and I would use that particular wick as a confluence for my position. I'll then put that on the chart, superimpose it on all the lower time frames so I can see exactly where I am and where I need to be when taking that position. So we've got that from the weekly time frame, so we'll tick that box. Now, what I also have on side at the time, although for now it doesn't look as if it played out, but I was using the confluence that the last weekly candle closed bearish. Therefore, I was under the impression, or my strategy suggests, that the current weekly candle, i.e. the candle that we had that was due to close on Friday, would also attempt to push and close below that weekly 50 MA. So although it didn't do it, that is a confluence for my trade, simply based off the weekly time frame for now. Now, unfortunately, what in a previous video you would have heard me talk about the fact that I wasn't really happy how the daily candles had closed. I really wanted price to close below this daily 50 MA, adding to that confluence train that we're on side with the weekly, we're on side with the daily, and then pretty much the rest is history based on lower time frame analysis. So that 50 EMA was certainly going against me for reasons to take the trade. However, as a confluence to then take the trade, my thought process was, well, if price is now looking to have made a higher high on those lower time frames, potentially we're in the realms of just simply price is looking to make that higher low before that higher high continuation. And what I mean by that is, let's say, for example, on the lower time frames, this wick is most certainly a high. We can see that it is most definitely higher than the previous wicks that we have. So that would be the higher high on the lower time frames, expecting then a higher low to be created for then a higher high. So my confluence was, well, I'm happy to trade that leg, but I must potentially manage that slightly differently. I might well have to be aggressive in my management style, moving to break even, because I have no idea on the lower time frames really when is price going to turn around. The best I can do is simply highlight order blocks in the upward, in the long direction, to see where potentially price could look to turn around. And as we go to the lower time frames, that is what you shall see. So at that moment, I'm looking for short positions. Now, once I use the DXY as well, I know you're sick of hearing it, but the DXY really is a catalyst. And once you start bringing that into your scan, into your trading, more often than not, you are going to find that you will be on the correct side of the market, particularly if you're able to use that DXY on the lower time frames. Now, what we can see here, I've explained why I actually shorted US dollar CAD using the DXY. That was just past London Open as a result of expecting, to be honest, price looking to come down to the areas which would be favorable then for US dollar CAD to make that long move in line with my higher time frame bias on US dollar CAD, on the DXY. So that's why I took the short. Now, why would you then take a long on DXY, which would then bring in perfectly shorts then on GU as the DXY strengthens, the cross pairs against it are going to have the effect in the opposite direction. Very simple as that. So, as we were saying, on the DXY, we're in a very nice position to anticipate price wanting to move towards the up. So we've certainly got the confluence of that gap fill. And again, much like on GU, knowing that, the previous candle on that weekly time frame rejected that weekly 50 MA, although clearly I was wrong and price has closed below that 50 EMA. What I had as a confluence was that price has every reason to want to start to push towards that weekly 50 MA, particularly on that Friday. Of course, as we can see now, that wasn't the case, but at the time it was most certainly a confluence for taking a, let's say, a long position on the DXY, which then correlates nicely to have taken a short position on GU. As well, we've got the same type of confirmations based on wick imbalances. I mean, it is here, but ordinarily I wouldn't normally be looking to use a wick of that length. Really, it's standout wicks that I'm looking for, but nevertheless, I put it on the chart to see if would it really start to align. If it starts to align once it puts it on, once I put it on the chart, it's then my job to try and make it make sense. Does it make sense for price to want to reject in and around these areas? As we start to go down to the daily time frame, we can see how that wick imbalance that is superimposed from the weekly onto the daily, it is starting to make sense as a result of price being held by that daily order block just here. Understood, yes, it has been mitigated, but the fact of the matter is price has not closed below it, meaning for me, it's still a valid point of interest. It's just, can I refine that area down to ensure that I am now looking for order blocks that have not been mitigated? So I'm starting from my top, and I'm simply using top-down analysis. So on that daily time frame, again, I've got a lot of reason to believe there could well be a reaction towards the upside. Again, the unfortunate thing I should say about the DXY, if I get my words out, is the fact that that previous daily candle closed bearish below that daily 50 MA. So just like on GU, understanding that my targets could well be limited as a result of GU actually slightly looking bullish in terms of where it could go. And although my long-term thought process for the DXY was very much so also bullish, that couldn't be the case. I can't have GU looking bullish as well as the DXY looking bullish. Something had to give. Now, the clear thought in this, or the clear, let's say, stumbling block, is that daily 50 MA. The fact now that price was respecting it to the upside on that daily time frame, price gapped and closed below and simply failed to break back above. Quite annoying, to be honest, but nevertheless, we still refine that area down, and we're looking for rejections towards the upside. And what I mean by that is, as a result of being above that daily 50 MA on the daily time frame, I'm just simply expecting price to want to come down towards it and continue rejecting it. As soon as we then break below it, I'm expecting the opposite, much like that. But since we're at the lows, once I then start to refine those areas down, now bottom left-hand chart, you can understand why now still we've had room to play with based on looking for that long position. I'm not asking the DXY to move mountains. I need a reaction from that DXY to at least allow my reaction short on GU to place me nicely into break even. So as a result of that bullish engulfing candle we had on Wednesday, I was able to then select an order block, I believe still within that daily order block. So we're still operating within the realms of that higher time frame bias. Now, that's not really good enough for me based on the DXY, knowing that I need to treat the DXY just as I would treat any other cross pair that I'm using. And as I always say, I have in the past traded the DXY using my strategy and have been very successful doing so. So I know it works. I also know that price respects these order blocks, as you'll see on the 15-minute time frame. It's almost textbook work of beauty, let's call it. So refined within this 4-hour order block. Again, look how that wick imbalance from that weekly 50 MA, from that weekly time frame is really playing nicely. See how price came in on that 4-hour candle and rejected it beautifully. Next candle, bullish engulfing, allowing us to use that order block. It's picture perfect, to be quite honest. Now, we'll use all of this segment and we're onto that 15-minute time frame. So we're now within that 4-hour order block. We've got a couple of areas that I'm looking for reactions from. So I took the reaction short on US dollar CAD to the lows. And then I was looking once price, as you can see my alert, was just above the first 15-minute order block to see can I get a bullish reaction from there. Unfortunately, I didn't, and I believe as a result of not getting a reaction from that, I think I took a loss or at least a break even. I can't remember. I think it could have been a loss, to be fair, as a result of having or potentially jumping the gun a little bit too early, in my opinion. That's certainly what I've journaled anyway. I remember that. Didn't really have enough confirmation on that DXY to have the confirmation to take a short position on EU. But nevertheless, just as it was forecast, pricing came down to the absolute lows, retesting previous daily lows as well. It just works, always. If I just listen to myself and what I preach, Charles, if you're going to look for a long within your refined point of interest, refine it down to the 15-minute time frame. If there's two, await the lowest. It's something that I teach a lot, but again, as I'm pretty sure I've mentioned in a previous video, particularly that US dollar, Euro-US dollar breakdown, it happens to the best of us, right? It happens to the best of us. So I'm pretty sure it was a loss, Euro-US dollar. Nevertheless, price came into this 15-minute time frame, and now have a look at the confirmation that we had. So at that same time, I think it was around about 3 o'clock in the afternoon. Yeah, 3:15. That's where I got the first real confirmation that the DXY could be ready to have its move towards the upside. Again, I'm not expecting it to go to the moon. I'm not expecting it to go to the absolute highs. I need a rejection from there. So as a result, then, I've seen a bullish engulfing candle coming out from the lowest 15-minute order block, now rejecting that previous daily low as well as my overall thought process that I already have on GU. So don't forget, I want to trade GU. I'm now just looking for real confirmations that actually the cross pair, the cross index, the DXY, looks as if it's going to move bullish. So I'm not trading alone. I'm no longer just trading GU. I'm also having that confirmation from the catalyst, which is actually going to move GU. It's not that the pound is particularly weak. It's just that the DXY is incredibly strong, right? So if I can gauge that, it's a win-win scenario for me. So off I go back to GU. Round about the same time, GU comes into its 15-minute order block. And again, here could have been a stumbling block for me, but I believe price just rocketed straight through it and without any confirmation. Yeah, that's it. So again, potentially a stumbling block here based on this 15-minute order block that we had just here on the DXY. It all aligns. Again, I repeat myself over and over again. Once you can understand how to use that DXY, it will be your best friend, I assure you, if you're trading cross pairs of the US dollar. Now, let me get to the point. So price came into its 15-minute order block. Do I know price is going to turn around from here? I have absolutely no clue whatsoever. I'm simply rinse and repeat of my strategy. As I've already explained, the confidence for taking the trade. Let me bring that larger for us all to have a better look. I went down then to the 1 minute time frame. Again, I did the same on US dollar CAD. I know that looks tremendously bad. Right, here we go. Lower time frame break of structure. I'm pretty sure you can see it. It's pretty straightforward, to be honest. If I even start from here, and I do this from time to time, higher highs, higher lows. Could this be a lower low? Unfortunately not, as a result of a higher high now being created. So as soon as I see price now doing that and breaking significant structure points on that 1 minute time frame, I am now looking for order blocks up at the highs to then take that short position. Now again, I've got a couple of options here. I think maybe this was on the 5 minute, but nevertheless, you can see how it all works out. Now I'm in the position where, do I wait for the highs? And you can see again, I hadn't done so. Do I wait for the highs, or do I take the position sooner rather than later? So my thought process is one that, if I don't want to wait for the highs, I could easily well just set a sell limit. But what I was prepared to do is understand that this is a position that I will be in regardless, because if I set a sell limit from here, I'll also be in here, as long as my stop loss doesn't move as a result of where I want to take a position from. Now let me try and explain that a little bit better. If I want to take a position from, let's say, these highs, which would allow me to then have a stop loss, let's say like that, or even let's just call it a 10 pip stop loss. If that was my desired place for the stop loss, if that is going to affect my risk to reward dramatically as a result of moving my entry, then it's very clear. If I have the difference between, let's say, this and this, then it's quite obvious that I'm going to need to ensure that I wait for the better entry. But the way I saw it was, well, it's Friday. I don't have many hours left of the trading day, maybe 3 or 4 if I don't want to if I don't want to close my positions out before I want to get on with the rest of my afternoon. So for me, it was one of those where the DXY, regardless, looks like it's respecting its 15-minute order block. So that's what I'm working with at the moment. So then it's like, it's the same protocol. Well, is GU also going to respect its 15-minute order block? Again, I have no idea, but what I do have is confirmation based on that 1 minute break of structure. I have confirmation on the DXY on that 15-minute time frame that we have that bullish engulfing candle coming out of that area. And then what you can see perfectly is price returns back to that area on the DXY and it respects it. So it's not as if I'm actually waiting for the confirmation that price is going to respect that order block here and then come in. At that stage, I then don't have enough time to then take the entry that I desire to take on GU, as price would already be down here, which it simply meant once I can identify those areas on the DXY, I now have that confluence to take the position on GU. Not only with that said, I also have that confluence on GU based on what I have as GU as a standalone pair on that 1 minute time frame. And for me, that is pretty textbook. You can see how price has gone up in that uptrend. We've certainly broken structures on that 1 minute time frame. We've returned back to the order block. In my opinion, of course, the better order block is right up here, up at those highs. And you can see that's twice now. If you go through my videos that I've created, US dollar CAD, price came back up to the highest order block. Nevertheless, I took a limit order on this and got on with my day, to be honest. My stop loss placement didn't change regardless of where I wanted to place. My stop loss would have changed based on size, but my targets were still remaining as fixed, right? So that's the reason for taking that position. Again, a nice position based on the DXY, and I figured just share that position with you guys before I wipe these charts clean and start again for the day. So the takeaways: DXY, understand how to use it, chart it like you would chart any other pair that you trade. Understand that I personally have traded my strategy on indexes, on the DXY in particular, and I've been very successful doing so. And what I figured that, well, instead of trading the DXY, why not just use it as a confluence to trade your cross pairs? That way, I limit my exposure, let's say, potentially to losses on the DXY, but I actually increase the likelihood then of trading the cross pairs because I understand how the DXY moves. So again, I'll repeat, it's a bit of a win-win scenario when you can understand how the DXY works. So I hope that made a lot of sense for you guys. As you know, I love making these videos, so I'll continue to do so. And until next time, as always, thank you very much for the support across all the channels. It is very much so appreciated. And this probably will be the final video of the evening. I'll give TradingView a break for today. But until tomorrow, take care, everyone. All the very best. I hope my allergies allow me to speak a little better. But nevertheless, I hope you was able to gain some benefits from the video. Do take care. Until tomorrow, all the best. Charles.